Set 1 Concept and Mechanism of Securitization 유동화의 개념과 작동 방식. Securitization is a financial process through which illiquid assets such as loans or receivables are transformed into tradable securities. This mechanism allows financial institutions to pool various forms of debt like mortgages, car loans, or credit card balances, and sell them to investors in the form of asset-backed securities. The core idea behind securitization is risk redistribution. Instead of holding these loans on their balance sheets, banks transfer the risk to investors. This provides the banks with more capital to issue new loans, thereby increasing liquidity in the financial system. Entities called special purpose vehicles are created to hold and manage the pooled assets and isolate them from the originating institution's credit risk. Set 2. How risk diversification happens. 위험 분산이 이루어지는 방식. Risk in securitization is diversified through a process called tranching. The pooled assets are divided into different layers or tranches, each with varying levels of risk and return. Senior tranches receive priority in repayments and have lower risk, while junior tranches are paid later and bear more risk. This structure appeals to different types of investors and spreads the risk across the financial ecosystem. Credit enhancements such as insurance, over-collateralization, or reserve accounts are often added to protect senior tranche investors, reinforcing overall stability. Set 3 Applications and Real-World Significance. 응용과 실질적 의의. Securitization plays a crucial role in global finance. It supports credit expansion, lowers borrowing costs, and facilitates diversified investment options. For instance, the growth of mortgage-backed securities in the early 2000s significantly increased home ownership rates in the United States. However, this financial innovation is not without its pitfalls. The 2008 financial crisis was largely triggered by the collapse of poorly structured mortgage-backed securities linked to subprime mortgages. Many of these securities were mispriced, and the underlying assets defaulted in large numbers, leading to a cascade of institutional failures. Thus, while securitization can enhance efficiency, it also requires strict oversight and transparency to avoid systemic risk. Set 4 Regulation and Oversight. 규제와 감독. In response to the vulnerabilities exposed by the financial crisis, governments around the world have enacted comprehensive regulations on securitization practices. In the United States, the Dodd-Frank Wall Street Reform and Consumer Protection Act introduced several key reforms. Originators are required to retain at least 5% of the credit risk of the securitized assets. Issuers must provide detailed information about the underlying assets, including loan-level data and performance history. Independent assessments of asset quality are mandated to increase transparency and reduce over-reliance on credit rating agencies. Similar regulatory frameworks have been adopted in the European Union through the Simple, Transparent, and Standardized STS Securitization Initiative.